Hello, folks. Welcome to Social Media News Live. I'm Jeff C., and you're not. And this is the show that keeps you up to date on what's happening in the world of social media and so much more. And have you ever found yourself wondering how to take control of your finances as a creator? Maybe you're looking for ways to keep more of what you earn and avoid unexpected tax headaches. Or maybe you're trying to figure out how to turn your creative passion into financially stable business. Well, if any of those sounds familiar, you're in the right place. This week, we're diving into the world of creator finances with Ralph Estep Jr., who knows the ins and outs of managing money, taxes, and business structures. And he's here to share practical advice, smart strategies, and the financial must-know every creator should have on their radar. So sit back, clear your schedule, clear your mind, and get ready for this week's episode of Social Media News Live. Ralph, my friend, how are you doing today?
I am doing fantastic, and I'm glad to hear that I'm not Jeff C. That's an important place to start.
That is right. Everybody talks to me about that line, and it's totally stolen from Chevy Chase back in the Saturday Night Live, because he would always do the weekend update with that, and it always would crack me up. Yeah. So
it's perfect.
If you don't know who Ralph is, he is a financial expert. He is a financial expert and entrepreneur with over 30 years of experience helping individuals and small businesses owners navigate their complex financial challenges from a Christian perspective. As the principal of Saggio Management Group, he specializes in tax preparation, financial management, and technology integration to help businesses streamline operations, increase profitability, and avoid costly pitfalls. So once again, Ralph, this one is going to be exciting. So thank you so much for being on the show today.
Oh, you're welcome. I've been doing accounting since I was 8. So, I've been doing it professionally for over 30 years, but I started when I was 8. That's a story for another day, but been doing it for a long time, Jeff. So I appreciate you having me on the show.
Yeah. So Ralph kind of got in my radar because we've had Dave Jackson on, I believe it was the week before. He is in there a lot of times with me on the Saturday morning things, and we're talking about podcasting, but Ralph does a daily podcast. And one of the things I people who know me know this, I hate financial stuff. I don't understand it. But Ralph's emails and his show and the content he puts out, I see it in my inbox and I'm like, oh man, I'm asking that question. Oh man, he's saying exactly what I need to hear. So that's what got Ralph on my radar, because his content is very poignant and it really, really helps, and it's easy to understand. He teaches it in a way that I think is easy to understand. So Ralph, kudos to you for your that's a lot of work, a daily show, great content. So congratulations on all that you've been doing. It's really been great.
Thank you, Jeff. It's intentional for me because this is what I consider my mission field. And that's why I've kind of married two worlds together, because you can't really separate someone's faith from their finances. And that doesn't mean you have to be the same faith as me. It just means that really gives you that character, that bottom line character, which I think is so important, especially in the world we're living in today. There's so much of a problem with people's character. But if I can ground that, and I can use that as the basis for why you want to make good financial decisions, and it just works. And yeah, the daily thing, dude, I had no concept of what I was getting in when I did that, but it's been fun. I really enjoyed it. I put about 2 hours a day into the show. Wow. And because I'm trying to reach people, I look at it as my mission field. But thank you, Jeff. I appreciate what you said.
Yeah. And by the way, Ralph is, once again, this show is sponsored by our friends over at Ecamm. You can find out more about them at ecamm.com/Jeff. You can enter code Jeff15 to save 15% on your first purchase. But Ralph uses it for his daily show too. You can see he's getting this professional setup. He is taking things to the next level. So we appreciate Ecamm for sponsoring the show today. But I want to dive right in really quickly, Ralph, to some stuff that, creators a lot of time don't think about. At least I didn't when I first started. And we're going to dive into the weeds today because I know you can explain things really, really well. And a lot of accountants, and I'll just kind of this blanket statement when I say a lot of accountants, but I have found when I've asked questions before of different tax professionals and people who do, financial planning and all that stuff, when I mention that the creator or an influencer, they kind of go, it's like, well, it's kind of a gray area, and they don't have any hard and fast things that they're saying. So that's why I wanted to have you on the show, because I know you'll give us honest advice, and if you don't know something, you'll just say, I don't know. But as coming from a creator or influencer kind of business, what are some of the key tax obligations that we as creators need to be aware of, especially concerning like self-employment taxes and all that kind of stuff?
Well, let's start with the basics. I mean, the bottom line, if someone is paying you for content, or they're paying you for clicks, or they're paying you any kind of affiliate income, you have an obligation to report that income, because if not, guess what? That's what put Al Capone in jail. It wasn't the racketeering, it was the taxes. So you've got an obligation to report that income. You got an obligation to make sure you're doing all those things, because that's a lot of times people don't think about that. And I meet a lot of people in the creator community, and they say, well, I just earned a couple bucks from my Amazon affiliate, or I earned a couple bucks from some YouTubes that I posted, or something along those lines. And they don't realize that you have an obligation. Now, Jeff, this is starting to become more pronounced,
Mm-hmm.
because a lot of these companies are now sending out 1099 forms. And I don't want to bother everybody with burden. I just did a show about this the other day. But at 1099, here's the thing you need to understand. That 1099 goes to you, and it goes to the IRS. So the IRS is going to be looking for that. So you've got to make sure you're keeping track of your income and expenses. And we'll dive into that a little deeper. But you specifically talked about self-employment tax. And this
Mm-hmm.
is a thing that surprises a lot of content creators. They figure, well, I'm just going to have to pay federal tax. And if you live in a state, now I know you're in Texas, so there's no state income tax,
Right.
but I'm in Delaware. We have a state income tax. I think there's about 9 states that don't have state income taxes, but you're going to pay at least federal. And if you live in a state where there's state tax, pay state tax. But this is the dirty little secret nobody mentions. There's also what's called self-employment tax. So let me give you a real simple how that works. When you work for somebody else, you'll see on your pay stub, you'll see federal tax, and then you'll probably see something that says FICA or Social Security, and
Right.
you'll see something that says Medicare or Med. Well, when you work for somebody else, they match. You pay half, they pay half. Well, guess what? When you work for yourself, guess what? You got to pay both halves. And
Right.
that's another 15.2% on top of whatever you're paying in federal tax. So think about it. Let's say you're in the 22% federal tax bracket. Now I'm going to add another 15%. And if you got a state tax, you're getting close to 45% of your tax. Now, I've got some great strategies on how to cut that self-employment tax down. It's one of the things I do with a lot of content creators and other business people, but a lot of people don't realize that every net, now I'm talking about net income. I want to be very
Right.
careful what I say
Right.
there. It's not the gross. It's not what came in the door. It's the net. So this is why it's so very critical to make sure you're capturing all that information. My grandfather used to say this all the time. What gets measured gets done. Well, you've got to measure this. And that's the thing I noticed with a lot of content creators, because having been in this industry a little while now, a lot of people have flocked to me like, oh, Ralph seems to know what he's talking about. Well, I hope so. I've been doing it for a long time. But I'll say to them, hey, have you kept track of this? Well, I didn't really keep track of that. This thing just kind of blew up on me all at once. So the key, Jeff, big takeaway here. Number one, big takeaway, keep track of everything. Keep track of every single expense, every single dollar that comes in the door, because worst case scenario, you're going to meet with somebody like me and they're going to say, Jeff, we can't really deduct your trip to Tahiti. I'm sorry. It sounds good, but we
Right.
can't do it.
Right.
But hey, that microphone you bought, that internet service, that AI content creating tool that you bought, all of those things might be. Your trip to Podcast Movement or something like that could very well be deductible.
Okay. So, what's the best way for creators to handle that income reporting from those various sources? Like, let's say brand partnerships, affiliate marketing like Amazon, which you just mentioned, and like some ad revenue that they get, or for sponsorships or whatever. What's the best way to I guess capture that information and then report it? Is it, do you just make a line in QuickBooks? How do you suggest creators track that?
So I'm going to make it real simple. Have a separate bank account, and all of that income goes into that bank account. I don't really care where it's coming from. It doesn't matter to the IRS where the money came from, whether it came from affiliates, whether it came from money you earned from Ecamm or from merchandise you're selling, doesn't really matter. But if I look at your bank statement, and this is what I do with my clients, I say, okay, all these deposits are sales, correct? Now, unless you're putting money in to subsidize the account, that's the easiest way to do it, Jeff. And just say, hey, whatever comes in the door, that's sales. And just drop that into an account by itself. That way it's really simple to track.
Gotcha. So I think we've kind of chatted about this offline a little bit, but one of the things, and I know a lot of the people who watch this show, I mean, we've had Billy Thorpe on, he's a big Amazon influencer. And a lot of times we'll get either sent stuff to review, and then we, make the review. They can pay us for the review. Sometimes they don't pay for the review, but then we put it to Amazon and we get affiliate income from that when people buy it. If we buy that product ourselves, can we write that off, or is is it fair use? I mean, do we have to use it so much? Because I've seen these formulas like if you use it like 70% of the time, then you can, but if you don't, all this stuff. So what's the best thought on this, Ralph?
So I think if you're buying something to use to demonstrate on your program, let me give you an example of this. One of my good friends does a podcast called Practical Prepping.
Hmm.
And he buys tools and practical prepping gear that he uses to talk about on his show. And he asked me this a couple of weeks ago. He said, Ralph, he said, what can I deduct? I said, his name is Mark. I said, Mark, if you're going to be using that as a demo on the show, then I think that's absolutely legitimate as a business write off.
Hmm.
Absolutely. Now, if you're going to say, well, I'm going to go buy a new Tesla because I'm going to show how I can drive around in a Tesla, I think you're going to get yourself in trouble. Jeff, here's one of my other big takeaways.
Hmm.
Since I was a young chap starting this at 8 years old, my grandmother was a big influence to me. And I used to say to people when I was first starting my practice, if I can prove it to my grandmother, I'm probably in good shape, because most people don't lie to their grandmom, right?
Right, right.
Unless you're just a scoundrel, and I don't deal with scoundrels. But you understand what I'm saying. So
Hmm.
if you're being reasonable, I think that's the key. Because put yourself in the shoes of that IRS auditor. If that IRS auditor, and you're not going to get audited, but if I call it the unlucky winner of the audit lottery.
Right.
If you are the unlucky winner of that, this IRS agent is just trying to do their job. People get so scared of the IRS. If you're doing the right thing, you've got your receipts, you've got your documentation, and you can prove it to the IRS auditor. Let's use a camera, for example, right?
Hmm.
So let's say you do a daily video show like I do, and I happen to be staring at an Insta360 camera right now.
Hmm. Hmm.
Well, if that company sent me that camera and I'm going to use it on my show, then absolutely, I think that's a tax deductible expense. If it's something that's not going to be used in any way, shape, or form in the content creation, I think you're going to get yourself in trouble.
So what about and this has happened before, and I know Billy does the same thing, is a lot of times they'll send us something that, we do a review on. We might get paid for it. We're going to put up on Amazon. We're going to get affiliate money. We're reporting that, if you're smart, I'm reporting all that influencer money that I get from Amazon. Like it goes right into the bank account. It's tied in directly. It comes in as income. But what if I take that, let's say they send me some tweezers and I review the tweezers and then I sell the tweezers on eBay or whatever. That I'm assuming you also have to report as income as well. Don't try to hide it and do a garage sale and get all this stuff away. You still have to report all that as income, correct?
Yeah, and absolutely, because if you got something for free and you turn around and sell it, you got to report that income. Absolutely. Absolutely. Yeah.
Gotcha.
And that's the thing, Jeff, is people try to play games, right?
Hmm.
And it's little nickel and dime stuff. And it's like, do you realize how much audit jeopardy you're putting yourself into for something that's so small and minuscule? It just doesn't make any sense at the end of the day.
Yeah, I agree. So that's great to hear, because I know that has been, I mean, there's so many things floating out there around the interwebs. And that's why I love having Ralph, having somebody that you can ask who can tell it to you straight, I think is great. So we're going to be pulling up his askralph.com. That's where you can find Ralph. If you're listening to this on the podcast, he responds to his emails. He's got a great newsletter. He's written many books. So askralph.com. Make sure you guys go there, check him out, check out his daily show. Cause I'm serious. He covers so many great questions, that I just am like, oh my gosh, I got to save that one. I got to save that one, cause it's so good. So askralph.com. Don't forget to go sign up and leave him a rating and review, cause that really does help him out. So you kind of mentioned, the self-employment taxes. We talked about that. But let's talk about quarterly tax payments, because I know I hear a lot of my influencer friends. Now, I'm a S corp, so I'm a little bit different. But a lot of the folks who have like LLCs or something, they go, "Oh, I got to pay my quarterly taxes. Oh my gosh, it's tax season." So, can you explain the importance of making those quarterly tax payments and what happens if you miss those? Because a lot of people are like, I'll just do it later, kind of a thing. I know a lot of creators talk that way. So, what would you tell them?
First thing I would say, S corporation is a fantastic structure. And we can talk about that later if you want, but that's a great way to help reduce your overall tax burden. But when you're talking about estimated taxes, think about it in these terms. When you work for somebody else and you got a paycheck weekly or biweekly or
Mm-hmm.
monthly, they withheld taxes because the IRS is a pay as you go type of system.
Right.
They want their money when you earn it. So somebody like me, you come in and sit down with me and I say, okay, Jeff, looks like your income is going to be X. So therefore let's just use a real simple example. You're going to owe $4,000 in tax. Well, I'm going to say to you, hey, Jeff, here's what I want you to do. I want you to pay that quarterly $1,000 a pop. That way the IRS can't say, well, I waited to the end of the year to pay, because they want their money when you earn it. Now,
Mm,
a lot of people get hung up on these due dates, and the due dates actually don't have anything to do with the quarters. They're actually April 15th, June 15th, October 15th, and then January 15th of the following year. Here's my big takeaway, though, Jeff. If you're at least paying them around those dates, I think you're fine. The point is to make a habit of it. The point is to pay those things. Because if you don't, two things are going to happen. Thing number one is, when somebody does your taxes at the end of the year and you didn't make estimated tax payments, the IRS will actually charge you what's called an underpayment penalty.
mm,
And they will penalize you. States do this too. The penalties vary depending upon how much income that you're reporting. So as you're like, I'll give you a great example. I got this one client, he's an attorney, and he hates the IRS. He hates them with a passion. And he says, Ralph, I will never pay those rascals a dime in estimated taxes. And I said, okay, I'm not going to use his name. I said, okay, that's fine. But here's what you need to understand. I am going to send you a letter from my file that says, when I do your taxes next year, you're going to get hit with a penalty. And he says, that's fine. I'll pay the penalty. I'll pay their blood money. But if you want to stay out of the penalty zone, kind of like a hockey game, right? You want to stay
right.
out of the penalty zone, you make these quarterly payments. The second side of that is a financial benefit to you. It helps you, manage your finances in a way that you don't get to, like, here's a nightmare scenario. And this happens all the time during tax season, especially with somebody I haven't worked with before. They'll come in, I'll do their taxes, and I'll say, hey, Jeff, guess what? You owe $25,000. And they fall over and hit the floor.
Right.
Right? Because first of all, they had no idea what they were doing, which is okay. That's fine. Everybody has issues. But then I say to them, okay, well, have you paid as you go along? And no, I didn't pay anything. So that's the other side of that. There's the compliance side, and then there's the cash management or the cash flow side, both of which are important. But that's really the key to making those estimated tax payments.
So Ralph, let's say, if I'm paying estimated tax payments and we've got it set it up, I've come to you. Let's say my car breaks down and my kid has to pay tuition because we got to pay another bill. What if I can't afford that tax estimate that I'm supposed to put in? What happens?
So again, I would just say to you, if you can't afford it, then two things are probably going on. Number one, maybe your business isn't performing at the level that you expected it to. So
Mhm.
your income is down. So you're probably not going to owe that much anyway. If by chance you're just making bad decisions about needs versus wants, and we can talk about that later. If you can't afford to pay, you can't afford to pay. The Bible says you can't get blood from a stone, right?
Right.
But if you find that look, things happen in people's lives, right, Jeff?
Mhm.
We have that car repair we weren't expecting.
Right.
We have that leaky roof we weren't expecting. Just try to make it up in the next quarter, or try to make it up a couple weeks later. Again, the idea is have that momentum that sometime before the end of the year, you've got that money paid in. Because if you overpay, you're going to get the money back. So one of the things that I tell clients when I work with a client, here's what Ralph tries to do. Ralph tries to get them within $500 of owing or getting a refund. That's kind of what I call the sweet spot.
Right.
So I'm going to look at, and this is the other thing a lot of people don't understand, Jeff, and this is one thing I preach in my business about all the time. Tax preparation is great, but it's not where the value is. I can make your numbers look great. I can dot the I's, I can cross the T's. But
Mhm.
where the real value in accounting is in tax planning. So one of the things that you should be doing is spend some money, meet with somebody like me a couple times a year. Don't just wait till the end of the year, because when people come in and meet with me after the fact, if there's not a lot I can do. Yeah,
Right.
I can make the numbers look great. I can keep them in compliance. But if they come and see me in October and I know what's going on, maybe I can tell them, hey, go buy some equipment before the end of the year. Prepay some expenses before the end of the year. Because it's at some point it's like a shell game, right? It's like I want to get as much expense in the current year, and I want to get at least a little income in the current year. But there's things that we can do to help do that. But so many people just don't want to spend the money to go work with somebody. They say, "Oh well, I'll just go to H&R Block at the end of the year, or I'll get
Right.
online." I recorded a show the other day about why you want to pick an accountant, not an online service.
Right.
But anyway, there's a lot of AI tools out there that claim to be like me, but nobody's as good as me. And that sounds very arrogant. But the
No,
truth
but
is,
I get
I
it.
got
I
street
get it.
credibility, Jeff, because I've been doing this for a while. And there's very little that people bring to me and I go, I've never seen anything like that. I have seen a few. I got to be honest. Like I've seen
Right.
some stuff. I'm like, where did this come from? But anyway,
Right.
big picture. Tax planning is where it's at, Jeff, because if you are planning, if you are making wise decisions, then the truth is, by the time you get to tax time, you should be zeroed in on what that's going to look like.
Mm, that's a good, and I know because I'm coming from the creator mindset, and a lot of time, and you know this, Ralph, like you're spending so much time creating content, building stuff. The last thing you want to do is wake up in the middle of the night in a cold sweat because you're worried about the IRS is coming to break down your door and take all your money. So that's why it's good, once again, to have somebody like Ralph that you can turn to, ask the questions. And we talked about this a little bit before the show. Is like, find somebody like Ralph who doesn't make you feel stupid and you can ask questions to. I've been on both sides of the spectrum where I've had really great people who've given me great advice, and then people who it was like I felt like an idiot going in and talking to them. You know, they like to lord over you. They even sat higher than you in the room to look down on you. I was like, what's going on? You work for me. Anyway.
Jeff, I think you make a very good point. Can I just add something to that?
Sure.
One of the biggest compliments I ever got from a client is when they said, Ralph, you make it simple. I don't have the capacity to understand what you're saying, but Ralph, you make it so that I understand it. And I work with people who are plumbers. I work with people who are HVAC. I work with content creators. I work with all kinds of people. And I'm able to explain it in a way that they can understand. And the other thing I'm going to throw at you, here's another thing. You didn't mention this, but you got to trust the person you're working with, because the truth is, Jeff, I said this to somebody today. My relationship with my clients is sometimes more intimate than the relationship they have with their wife, because I've got to know it all. I've got to really understand it. So you want to work with somebody you trust. You got to work with somebody. I say this, come in, I'll put my arm around you, because it's a team effort. Right. And if you've got somebody that's talking down to you, that is arrogant, doesn't understand, doesn't explain to you what's going on, run the other direction, because that's a bad plan for you.
Yeah. And one of the things is it's okay to say that I don't know stuff. Tax stuff is confusing, right? Like I don't want to know all the rules and the regulations. When I first was able to pay somebody to do my taxes for me, I was like, it feels, it's just like, I don't have to worry about that. I don't have to try to figure out TurboTax or whatever to try to do it. Now, I like AI tools because it helps me categorize stuff to make it the end of the year when I turn in reports easier, but I still need an accountant to go through that and double check and make sure I've got all my, like you said, the T's crossed and I's dotted. And one thing we didn't say at the beginning of the show, which we probably need to, is like, this is just general financial advice. I am not a financial advisor or have anything you should know by looking at me. I know nothing about this stuff. Ralph does, but he doesn't work for you. We're just kind of giving you general advice, best practices. Once again, you need to consult your own, your own tax professional, your own accountant. Talk to Ralph. But this is just general stuff. So I think we covered our bases there for this.
Yeah, Jeff, because everybody's situation is different. There's no cookie cutter. There's no boilerplate approach. So I'm glad you mentioned that, because a lot of people say, well, Ralph said to do this. No, Ralph said, here's an idea. Go talk to somebody in your area, schedule a conference call with me, book a call with me. But a great way to see that, Jeff. Good point.
So one of the things we kind of talked to the kind of the bummer, the Debbie Downer kind of stuff at the beginning here, but I want to know, like, what are some common overlooked tax deductions that creators can take advantage of to reduce that taxable income that, we all want to do at the end of the year?
Well, one of the big things I see, a lot of creators are working from their own home. So you've got to really focus in on what is that exclusively used space in your home. What are the expensive, maybe you've got an internet connection that you've got more robust because you're doing live streaming, or you need to be able to download things quickly. Any kind of conferences you're doing. Dave Jackson, I'm a member of the School Podcast, and he said to me one time, he said, Ralph, if I go attend other training sessions and I go meet with other people, can I deduct it? Absolutely. You're building your craft. And a lot of people overlook that home office deduction. They overlook those travel expenses. They overlook that training or those tutorial things that they're subscribing to. They overlook that internet. Maybe it's a cell phone plan. Anytime, here's the bottom line, Jeff. If you can prove that somehow there's a connection to the work that you're doing. Now, you got to be really careful with the home office stuff, because this has got a lot of people in trouble, because the IRS, I don't want to get too more in the weeds, but the IRS has a very strict test. It has to be used exclusively for business. So I tell you a funny story about this, Jeff. So I had a client a few years back. She was going to do her own taxes. She got audited. She came to me after the fact and she goes, I'm in real trouble. I said, well, what happened? She says, well, I claimed a home office deduction. And she said, I got a letter from the IRS and I was going to show them. I told them, you can come out here and look at my home office. So the IRS agent knocks at the door. Now, the IRS doesn't just show up at your door just to put that. They don't just do that. Yeah. He was invited. Comes into the house, walks up the stairs, looks in his bedroom and sees a couch. and says, well, and see kids' toys in the corner, and says to this client, it says to the client, well, wait a minute, does your kid come in here and play? Well, yeah, of course, this is our playroom also. Ding, ding, ding. You just lost the audit lottery because
Oh,
the IRS was very clear, exclusively used for business. So content creators, be careful. You're not going to make an argument that says, I have a 2,000 square foot house and I use 1,900 square feet for the podcast because, I film here and I
right.
film in front of the refrigerator and I do editing over here. Be very cautious about that. But if you've got space that's exclusively used for business, then you're good to go with that. So keep track of that. And it doesn't have to be complicated. And then what you're basically going to do, you're going to keep track of all your utilities, keep track of any repairs and maintenance. And it's a real simple equation. Like I said, 2,000 square feet. Let's just say you have a 10 by 10 office, right?
Hmm.
So
Hmm.
you've got 100 square feet you're using for the quote business, and your house is 2,000 square feet, where you're going to take a percentage of that. And then you can deduct each of those things. Now, why is that important? Because the goal is to try to get that taxable income down as low as possible because we're paying federal, state, and that sneaky self-employment tax. So if we can reduce those things by getting these expenses that a lot of people overlook, then that is the goal. Because here's the deal, right? I mentioned about Al Capone at the beginning. You
Right.
need to understand this. Tax evasion is a crime. They will come out, the IRS guys with the gold badges and guns will come and get you. But tax avoidance is fine. It's okay to avoid taxes. In fact, there's Supreme Court decisions that says it is your absolute right to avoid taxes. You just can't evade them.
Hmm. That's a good distinction, Ralph. Thank you for that, because we do not want to have people come after us while we're filming our shows. That would be bad. One of the things that I was going to ask you when you were talking about this is, like, for me, this is a portable building that I finished out in my backyard, so I can deduct 100% of this for business because I use it exclusively for business. I mean, I come in here and I may watch something on my computer, but it's not like I spend time in here. But it's where I film my show. It's where I work all the time, every day. I have a 20-second commute, so I'm okay to deduct that. Is what you're saying?
Absolutely. Like I have a farm. I have a 30-acre
Right.
Black Angus cow farm, and like if I don't have enough to do, then I'm also raising Black Angus cows.
Right.
Well, about
Right.
2 years ago, I built an office here on the property so I could have my office right on the property. And yeah, that's a business expense. It's a separate building. Now I'm sitting in my new studio. Now I have a particular space within the business that I'm using exclusively for this. Yeah, and if you watch TV occasionally, that's not a big deal because I
Gotcha.
could just make an argument that you're learning more content. You're looking for
Right.
more content for your show.
Yeah.
But if you have like a bunk bed in there for your kids or your grandkids, that's a different story. But no,
Hmm.
Jeff, you're totally fine with what you're doing. I don't see any issue with that at all.
So let's get, because I love this. I love not trying, like, we're trying to not evade, we're trying to avoid. So one of the questions that I have is, like, so my daughter, separate apartment. One of the benefits that I give her as she works for me, I paycheck, I take out money from her for the federal stuff. But I also pay for her internet because she uses it for me most of the time, and I use that as a perk that I pay for internet. She sends me the internet bill, I pay for it. Is that a correct deduction that I can take as a business expense because my employee is using that?
Absolutely. And the other
Okay.
thing I would say to that, the other thing a lot of people mess up, and this is called commingling. And
Hmm.
what I mean there is they have a personal account and they have a business account, but they mix the stuff all together.
Hmm.
So one of the things I mentioned at the beginning is having that separate bank account. Just make sure, Jeff, in that particular case, that your business is paying that directly. That
Okay.
way, there's no kind of question of, well, sometimes I pay for this with a personal card, sometimes I give her cash. If the business is paying for it, that's the cleanest way to do it. And I think I absolutely agree with you. I don't see that as being an issue whatsoever. Because she could certainly make the point of, look, I need high speed internet
Right.
because I'm doing content. I'm helping dad with the work that he does and all that sort of thing. So absolutely, I think that's a no brainer.
Okay. Cool. Yeah. I mean, it did pass the grandma sniff test, like you said. So I thought it was a good one to use. So one of the things that I know a lot of content creators, because when we started creating content, we don't just create it for me, Longview, Texas. I'm not just creating videos for Longview, Texas. I'm doing it for the world to see, or whoever wants to see it. So how does, like, multi-state tax complexities affect creators working with, like, brands? Like, I'm working with Ecamm. They're in New Hampshire. I'm here in Texas. How are there any compliance issues that we need to be watching out for, or things that, as creators, that because we're doing it nationally, not just locally, and I feel like a lot of the laws sometimes feel like they're just like for old school brick and mortar, and now we have this huge creator economy, and things are kind of in limbo. So, what do you suggest for people who have to collect taxes? A lot of times sales tax doesn't happen if you're doing a consulting gig. But what are your thoughts on the multi-state kind of field that a lot of creators have to deal with?
And this is a huge issue. Ever since the Wayfair decision, the Supreme Court decided that states are entitled to collect sales taxes or
Hmm.
taxes if you do work in those other states. Here's the big distinction: is do you? I'm gonna use a very fancy technical term called nexus, and nexus basically means, do you have a presence in that state? Use me for example. You and I right now having this meeting. You're in Texas. I'm in Delaware.
Hmm.
Now, I'm not traveling to Texas. I'm not sitting in Texas. I don't have an office in Texas. I'm not delivering products to Texas. So, as far as Texas is concerned, I don't have to file a tax return in Texas. Now, that said, think about if you're a creator. Let's say you're going to different spots to film videos, or you're
Hmm.
going somewhere to film content. Well, then you might have that nexus. One of the best examples I can give you is NFL football players. A lot of
Hmm.
people don't know this, but when these NFL football players go and play in other states, they technically have to file taxes in those other states. A lot of people don't know that.
I didn't know that.
Yep, because they actually have it's called the physical presence test.
Hmm.
If you have a physical, now I got to be honest with you, this is a very big gray area, and states are looking for ways to raise revenue. So they're trying to figure out. It's kind of like the Amazon model.
Right, right. I
You know,
remember that. Hmm.
it really is that, because like in Delaware, we don't have a sales tax. So if Amazon delivers something to me in Delaware, they don't have to collect sales tax. But if I send something to my son who lives in Texas, they collect sales tax on that purchase because Texas has a sales tax.
Hmm.
So if you're a creator, if you're sitting in your place of creation, I don't think you have any compliance issues with other states whatsoever. But if you're one of those people that goes out on a site to film videos, or you're doing some kind of on-site thing that's going to show that you have a physical presence, I think you might have some compliance issues there. Now, if you're selling products, you definitely have an issue.
Right.
So if let's just say, Jeff, that you decide I'm going to sell a product as part of my content creation.
Hmm.
Not software, because again, that's a whole other gray area, because that lives somewhere in cyberspace.
Right.
But physical stuff, if you're sending physical stuff to that, or if you've got an office in that other states, you definitely have presence in that state. And that's when you have to allocate your income between those multiple states.
Right. And
I
I
hope that was a
know,
clear answer. It's
yeah.
not a simple answer, because for the most part, I could probably say with some confidence that 95% of content creators will never have this issue,
Right.
because they're generating content that goes out in the internet and all that kind of stuff. There's no physical presence. But if you're out doing stuff like on particular sites, then you could have that physical presence.
So let's say I was a content creator, and one of my jobs that I do is I go out and set up Ecamm for people and their studios across the country, right? Like I go to Delaware, I go to Texas. That's where things can get a little bit tricky, is what you're saying, because I'm going there physically setting up something. Depending on the laws, I may have to charge sales tax, is what you're saying.
Well, yes, and that gets complicated too, because one could argue it was de minimis, meaning you were there 6 hours or you
Mm.
were there 8 hours. I don't really think the state's going to say, "No, we're going to go chase after Jeff because we saw he was in Minnesota for 6 minutes today."
Right.
No, they're not going to do that. But if you are there for a week or 2 weeks or something like that, Jeff, or if you're selling products that are left there once you leave, I
Mhm.
think you might have an issue with sales tax, or might have an issue with that physical presence. Now, a lot of people, and again, this is an area of huge discussion, because even online retailers, there are some, if you do less than 200 sales in that
Right.
state, or
Mhm.
there's percentages you can use. It is a huge issue, and that's why I have a few clients that are online retailers. I tell them, get on one of these sites like Shopify or one of those, because this sales tax compliance could be a whole nother job for you. Like
Right.
it's a big deal.
Yeah.
But again, every state has their own little nuanced rules. But for the most part, if you're not spending a great deal of time in that other state, I really don't think you're going to run into an issue.
One of the questions when you were talking, I was thinking about, like, for a lot of the creators, we sell digital products, right? We sell a course, we sell consulting, we sell whatever. And I know, like, platforms like Thinkific now are actually, they have the algorithms for you, and they'll take, if for some reason you sell one in Europe and you have to pay VAT or whatever it is, that they take care of it for you. Is that what you would suggest for creators who are selling like a lot of digital products, that they make sure that they have a system in place that does that for them automatically?
I think that's a great way to handle it, because
Okay.
if not, you need a tax department for this, Jeff. I mean, you
Right,
literally
right.
have to have a
Yeah.
tax department. Oh, because it's not just the states,
Hmm.
it's the cities. Like going to New York City. Now you got New York City tax, you got state tax. Like Tennessee is a great example of this. Tennessee doesn't have a state income tax, but some of the big cities like Nashville and all that, they
Hmm.
actually have city income taxes or
Hmm.
city sales taxes. Now, I want to be honest with you. Most people view a digital product as delivery from where it's created.
Okay.
So, but here's the problem with that. Think about this. Like a lot of us use server farms. Maybe
Hmm.
that server farm's located in Utah or that server
Right.
farm's located somewhere else. Do you have a physical presence? There's going to be a lot of litigation in this area.
Hmm.
States are looking at this like as this economy gets more into this virtual feel. Like this whole COVID thing brought that out big time,
Right.
because all of a sudden people are working from home. And the state's like, well, the argument was that I don't work in that state anymore. I'm working from home. Now I live in Texas or I live in
Right.
Florida, but where their business is located was still withholding state tax. So again, it depends. And that's
Right.
one of Dave Jackson's great thing about podcasting. It
Right.
depends. And this
And
is where you've got to meet with somebody that can understand your specific issues, because I can't say with 100% certainty, do this, do that. I can tell you generally, feel very confident in saying generally, I don't think most content creators are going to have an issue in this area.
gotcha. But once again, make sure so you can sleep well at night that you have somebody like Ralph in your corner that you can go to and ask these questions, send them an email, get a response. I mean, it's so, once again, that is what I think we're going to take away from this conversation is like, find somebody you like, that you trust, that can work with, and, get this stuff straight so you don't have the stress later on. On this next section, I want to kind of break it down and talk a little bit more of kind of like the financial management and some business structuring, because you and I have talked about this a little bit before, but like what point should a creator consider transitioning from a sole proprietorship to maybe an LLC or an S Corp? Like what are the things that are and the benefits of doing that? You kind of mentioned some reducing some tax, burden, doing it that way. So when should a sole proprietor go and like, listen, man, this year I'm going to do an LLC or this year I'm going to do an S Corp? What do you tell clients in those situations?
So I get this question almost 3 times a day, not just in the creative thing, but it's true. I think it comes down to like, what are you expecting? It's that idea, plan with the end in mind.
Mm-hmm.
If from a tax perspective, my view is that once you're showing positive net income of around $8,000 to $10,000, then that entity is going to pay for itself, because they're structured like that. I work with multi-member LLCs or subchapter S corporations. That's really the sweet spot when you look at what it's going to cost you to have an extra tax return done. So I can put a number on that. It's about $8,000 to $10,000 in net income. Now, what I can't put a number on, and I'm not an attorney, I don't play one on TV, I don't play one on this show, but liability protection. And a
Mm-hmm.
lot of people don't think about that in the content thing. But I think this one is huge. And I think a lot of content creators are missing out that they could get sued for libel. They could get sued for all kinds of things. Well, if you're operating as a sole proprietor, again, this is not legal advice, this is common sense advice. If you're operating as a sole proprietor, there is no distinction between your stuff and the business stuff.
Mm-hmm.
So, Jeff, let's just use you an example. Let's say someone sues you and you don't have that S corporation. They can take all of your personal assets, anything that you own, any retirement. Again, I'm not an attorney, so don't listen to
Right,
me as
right.
far as that attorney side. But creating some entity, it's not going to cost you that much to set it up in the beginning. Make sure it's done correctly, because a lot of people think they set up these on themselves and they're about what they're worth is zero, but they set them up themselves so they think they got
Right,
something. Like
right,
I've had so many clients saying, hey, I got an EIN number. I've got an entity. No, you got an EIN number, but that's a
right,
whole nother discussion. But
right.
Jeff, I think there's really 2 components to that. There's the tax side of that. And I said, like the break even is around $8,000 to $10,000, but the liability, I can't put a number on that,
Oh yeah.
because you get sued one time and you lose everything you've worked so hard for. And think about content creators. A lot of people, this is a hobby. This is something they're doing to make a little, I call it the side hustle, a little
Mm-hmm.
extra money. Well, you don't want your side hustle to turn and taking away your house, or liquidating all your assets, or you're having a fire sale because some knucklehead is suing you because you used a bad word and they took offense to it or something like that. So
Mm-hmm.
Jeff, it's really 2 components to that. There's the financial tax side and the liability side to that.
And we think that, oh, that's just a hypothetical. No, I've had friends that have had those, what are those attorneys that are, the ambulance chasers or whatever,
Oh, yeah.
go after him because there was a big farm and they sold products online and they went after him and just doing these lawsuits because they just wanted him to settle. And they did eventually settle, but it cost them 50 grand. Like, and they did nothing wrong except they had to get rid of this lawsuit. And so that kind of stuff, what you're saying, Ralph, I think is very important.
Yeah, and there's this perception that if you're a content creator, you must have made it. You must be making money big time on YouTube and TikTok. And so there's this thought out there that this person must have something. And these snake, I call them snakes or snakes in the grass. My grandmother used to call them.
Yeah.
These attorneys, they're out looking for that, man. They are just like out for blood and vengeance. And you're right, Jeff. You could win. Like I had an attorney one time, I had a client sue me because I don't remember what it was. It was a silly thing, but my attorney said, you're going to pay me more to represent you. You'll win in the end, but you're going to lose financially.
Right.
So that's why it's so important to have that entity set up. And I'm going to say, Jeff, you didn't ask me this, but I'm going to be blunt. I think you got to set up the entity right away. I think that's just a smart thing to do. If you're planning on doing this to make money, if you're doing it for fun, you're doing it as a sideline, you don't have any intention of making money, this is like your weekend thing, maybe you don't need that entity. But if your goal is, hey, this is at some point going to replace income or be my full-time job, I think you set that up at the beginning. Start with that strong foundation. I mention this to clients all the time. Get a good accountant, get a good attorney, get a good insurance person, and make sure you've got that building because, you live in a house, right, Jeff?
Mm-hmm.
One of the most important components of your house is the foundation.
Right.
And if you have a weak foundation, the rain comes and washes out the house. So you want to start with that strong foundation. That's a crazy metaphor, but it's true.
It's true.
It's like when we were kids, we had the nursery rhyme and it came and blew the house down, right?
Mm-hmm.
Well, you got to have a strong house. But one of the best ways that content creators can do that is start off with the end in mind and build that infrastructure. And it might be overkill at first. Hey, listen, I'm talking into a Rode Pod mic. When I first started and I had 5 listeners, I could have used my iPhone to record my audio.
Right.
But I bought equipment because I saw that at the end, this would be what I needed to have. The cameras, all the technology stuff. Think about it. How many content creators are spending thousands of dollars a year on stuff to make their content, but yet they don't want to spend $1,000 or $1,500 to set up that entity the right way and really protect themselves.
And Ralph, scarily, because I know a lot of content creators, we move in those circles, a lot of them are still sole proprietorships. And not that I was smart, because I wasn't. I've done a lot of stupid things. But when I first started this company, I had 3 partners with me. And so it was just it made sense for us to protect ourselves, because it wasn't so much about I was thinking ahead. I just didn't want somebody to take my house. That was it. Like what you had said earlier was, the protection. That's the only reason I did it, because I knew I could screw up really easily and I didn't want it to all go away. So if you're a content creator and you're still a sole proprietorship, talk to somebody, talk to Ralph, whatever. It's not that hard to get to an LLC, and it's not even that hard to get to an S Corp. So talk to them, protect yourself, because, with the way the world's going, you never know what's going to happen. In fact, that farm I was talking about before, it was because it was something about, compliance on their website. Like they didn't have text readers on their images, and they went after him to sue. And it was $50,000 at the end of it. Like, that's nuts. So,
and they're nuisance lawsuits. They're nuisance lawsuits.
Yeah.
But attorneys making money, you're spending money because you're hiring an attorney. It's like a divorce. The only person that makes money and makes out in a divorce are the attorneys.
Right.
It's the same thing here. So, and listen, I just want to make clear about something. Having an entity isn't going to necessarily keep you out of hot water.
Right.
But it's a hurdle. It's what we call this corporate veil. It creates a separation between the business and you personally. It's just like a fence, right? If somebody wants to hop the fence, they're going to hop the fence. Remember, as a kid, my ball went into somebody's yard. Guess what we did? We hopped the fence. Not me, because I was too fat. I was the fat kid. Somebody else going to hop the fence, not me. But you understand what I'm saying, Jeff. It's at least an obstacle.
To me, it was like insurance, like you had mentioned it, before. It's just, to me, it was just like you have to have liability insurance for your car. To me, having a business, it was just liability. Like, it just covered my butt in case something bad happened or I did something stupid. So,
and people don't, it's another one you should mention, is insurance. People don't realize how cheap insurance is. Insurance is not expensive.
Right.
but it's that peace of mind. It's that I put my head, one of the things I said when I went into practice for myself, I want to put my head on the pillow at night and I don't want to worry about that knock at the door. I don't
Mhm.
worry about what ifs. So again, I think we probably belabored this a bit, Jeff, but if you're listening to this and you don't have an entity set up, find someone who can help you set that up. Make sure they do it right, but do it. It is a investment in yourself and it will pay dividends for the rest of your career.
Yes. So if you haven't taken one thing away from this, hear us go out and set up your entity for your business because you deserve it. So let's go back to something you said earlier about one of the things that you see a lot, and I actually did this not well when I first started, but how creators can kind of implement some ideas for separate personal and business finances. What's the best way to keep those clean? I mean, it's really easy now with everything being electronic. I can pull up my phone and I can see it's categorized what I spent stuff on. So it makes it easier than back in the day when we were having receipts and trying like, where did this Walmart receipt go? Was that business or not? Now we can kind of have a little bit more kind of an easier way of tracking that. But what are some other ways that we can keep it separate between business and personal?
I think the big thing to do is have separate accounts.
Okay.
Have a separate bank account for the business. Have a separate credit card for the business. Here's one a lot of people don't think about. Have a separate Amazon.com account because a lot of people buy a lot of stuff on Amazon. Well, it's real easy to commingle that stuff. You know, your wife might need toilet paper for refilling and you need some content creation gear. Well, if you have separate accounts, it's much easier to delineate those things. Just try to keep them separate. I think it's a song, got to keep them separated, right?
Mm-hmm.
That's what we need to do though. And it's not that hard. And you're going to laugh about this, Jeff. I got one client, he's a plumber, right?
Right.
And he does not understand this difference, right? So finally came in one day and I said, all right, you've got a business checking account and you got a personal checking account. So Ralph, he says, I even got debit cards for both of them. I said, give them to me. And I wrote B in big black marker on his business. I said, this is your B card. If you're spending business, use your B card. And I said, this one is your P card. This is your personal account. Now he still manages to foul it up because,
Right.
oh, I forgot the B card. You understand what I'm saying, Jeff?
Yeah.
But to keep those things separate, because here's the benefit. If you are ever audited, I can say to the IRS agent, hey, subpoena the client's records, subpoena their business checking account, subpoena their personal checking account, subpoena their personal credit cards and their business credit cards. And if you're doing it right, the IRS agent goes, this one's got their stuff together. Nothing to see here. Moving right along.
Mm-hmm.
But if you don't do that, and I've seen this play out, Jeff, our IRS agent comes in and says, oh, well, you have all these Amazon charges. Let's open up your Amazon account. Oh, so you bought curtains today. I don't think that was for your business. Oh, you bought this, you bought that. But if you have it separated, it will take away that nightmare scenario of that audit. Because like I said, it's like pulling a slot machine, dude. If you land on all sevens across, you're in trouble.
Right.
But keep it separate. It's not complicated. Keep it simple, stupid. Like, that's one of the things that keep it simple. Keep it separate.
And it's easier. And it's easier now than ever to do that with these tools.
Absolutely.
Yeah. So it's not like, oh, I don't know. I think I only write checks to my barber, and I don't do that very much anyway. So I think it's a lot easier now to do all that.
It's not like we're carrying around stone tablets with chisels, and we're like, okay, this is a business. I better chisel out the receipt for this one. You're right, Jeff.
Do they even teach balance and checkbocks anymore in school? Because I remember we had.
It's funny you say that. Like I used to run a credit union, right, in my prior life, and it's a funny story. Members would come in and they'd say, I would say to them, "Your account's overdrawn." They said, "I can't be overdrawn. I still have checks."
Yeah.
Nobody balances their checking account anymore. They log into their app and they go, "Oh, the bank says I have $200. Guess what? I've got $200."
Right. It's so much easier. So no,
it is easier.
Fun. So we've talked a lot about, going and finding somebody, like if you need to set up an entity, if you need help and not waiting until the end of the year. So how can collaborating with a CPA familiar with the creator economy enhance a creator's financial health and compliance? Like when a creator goes to a CPA, like what should they be looking for?
You want to look for somebody that understands your industry. Like one of the cool things, and you're going to laugh about this one, Jeff, now, because I do this content creation until a couple of days ago. People come into my office. I had a teleprompter here and a Rode pod mic here. And they're looking at me like, Ralph, are you running a radio station or a TV station? Or are you an accountant? You want to find somebody that understands the industry you're in. I'm a public accountant in Delaware. We have CPAs and public accountants, just one of the little nuanced things. but you want to find somebody, not just the credentials. Credentials are important. I just did a show about this. Reviews and ratings are important, but find somebody that understands your industry, because every industry is nuanced. Like, for example, like I don't do a lot of foreign tax returns. It's not something I have any interest in. But now I do a lot more content creators, because content creators go, oh, he's got a daily show. He understands what I'm going through. He knows how to talk the jargon. So you want to find somebody that lives in your world, because those are the people that are going to have better ideas. And they're going to understand when you come in there and say, well, I just bought a Rodecaster or such and such. And they're, what is that? Oh, I know what that is. That's equipment that they're going to use. Or, I subscribe to Beautiful AI, or I use Captivate, or I use Ecamm. We're going to know what that is. And there's a lot of accountants that have niched down now to the point of where they're working with particular types of clients. And I think that's a legitimate question to ask. When you reach out to a potential professional, say, hey, do you understand rental properties? Do you understand accounting for, I don't know, what is multi-state stuff? There's a dozen things. It used to be just, I'm going to go see the local accountant. He's going to handle it. But, the thing is with Zoom, it's really opened up a lot of doors too, because like I have clients all over the world. I mean, I had a conference call this morning with somebody in Uzbekistan. I mean, I don't even know where that is, but like I'm doing a Zoom call with them. But because it's open up, because they know that I have the credibility that this is what I do. They're a content creator. They were starting to do stuff in that realm, so they wanted to work with me. But Jeff, that is crucial. Understand their credentials, work with somebody that has a credential, work with somebody that has a license, not somebody that does H&R Block. They take a 3-week tax course and say, hey, you're approved. No, bad plan, right? So, and make sure you look at their ratings and reviews, just like you would do anything else. It amazes me how many people go to professionals but never verify their license.
Oh, yeah.
It's a huge thing in most states. Like the Delaware has a board of accountancy. Like you can go look me up. And it'll say, Ralph has been in practice for X number of years. He's had no disciplinary actions. That's important too. But I think to understand what their nuances, what they understand, what they work in is crucial, because you don't want to go to somebody that doesn't understand your industry. It's not going to be a good fit. They're not going to be able to help you.
Yeah, I agree. Very important. So Ralph mentioned a couple of times, and I want to do another big shout out to our friends over at Ecamm. You can find out more about them at ecamm.com/Jeff. Save 15% on your first purchase by using code Jeff15. Thank you for those folks over there for sponsoring the show. They have a great community, and I know Ralph uses their product as well. As we move on to our final section, I want to talk about some, entrepreneurs have, we don't usually think maybe 5 years if we're lucky, but I would love to know what your thoughts are on, like, when we talk about long-term planning, like what percentage of income should creators start allocating towards like reinvestment in their business versus personal income and savings? So, because for me, and I'm kind of weird, but I will invest a lot in my business and like not so much the other way, which is not right either. But is there like a formula that you give your clients? What are your thoughts on, what should they invest in business versus personal income and savings?
So the first thing I'm going to say, as a Christian guy, I have a little different approach to this. I actually believe you should start by paying yourself first, and I would be putting at least 20% away for retirement.
Okay.
And a lot of people say, Ralph, like, how do I do that? Just make it work. That's what I would say. Pay yourself first by, meeting your needs, meeting your wants, but then put money into that retirement, that long-term strategy. Because the thing is, a lot of people don't understand this. A lot of content creators definitely miss the mark on this, because they're working for themselves. They're robbing Peter to pay Paul. They're just barely squeaking by. Well, they don't have that traditional 9-to-5 job with the 401k or some kind of benefit plan. So, and the next thing you know, they turn 35, then they turn 45, and then they turn 50, and they're like, oh, I don't put anything away for retirement. So Jeff, I would say first thing to do is plow money into that. I would say try to target 15 or 20% to put away for later. As far as reinvesting in your business, if you want your business to grow, you're going to have to put money back into it. And, if you think you're going to come to the business, you're going to spend every dollar you make, you're going to be out of business pretty quick.
Right.
Because the truth is, technology changes. You got to make those reinvestments in your business. But I just have a little different approach. Like, I'm a believer that you should be a tither. I believe that you should see. Let me just say this right now. It's like, I'm a believer that what you have isn't yours, and that's sort of a contrary to the world. But this is just who Ralph is, and you need to understand, if you're going to work with me, what I'm talking about. What I mean by that is you have an obligation to steward what you've been given. God has granted you certain things. He's given you success. Yes, you've worked for it. And one of the things I heard the other day is really funny. The Bible talks about that God doesn't, the birds figure out where to eat because God provides for them. But here's the thing, they have to leave the nest.
Right, right.
Well, you've got to do the same thing. God is expecting you to steward your resources. And that's what you're talking about when you mention long-term planning, which ties into exactly what I'm talking about this. You've got to be thinking about, what am I going to do when I turn 60, when I turn 65? And that's not really what you were talking about right then, but it's all part of that. It's having
Right.
that intentional spending plan from the very start. Pay yourself first. But yeah, you got to reinvest in your business. If you think, hey, there's $2,000 in my checking account, oh, bonus, we're going on vacation this week.
Right.
Well, first of all, have you put aside anything for taxes?
Right.
Have you put anything aside because your debts are going through the roof because you put everything on credit cards? And that's the problem. And see, that's what I see a lot of people in the side hustle or the gig economy. They don't think about that. And then listen, I started late myself. I just turned 52 in September. And my wife had been on me for 10 years. She's like, when are we going to start saving for retirement? When are we going to save for retirement? And I said, yeah, it's for old people. I mean, but the thing is, like, then I have Jeff, but I have other clients that started at 20, 25. Like my son's in the Coast Guard. He's 27, right?
Mhm.
And this boy has more money saved than I do.
Right.
Because he's a frugal dude to begin with. Like he
Right.
doesn't spend, like, I had to send his wife a heating blanket because he won't turn the heat on in the house. And I was like, my poor daughter-in-law. I was like, here's a heating blanket. But anyway, that said, he started off early. And I think if you can build that momentum, and I'm not saying save hundreds of thousands of dollars, but if it's $10 a week or
Yeah,
20 bucks a
something.
week, start there because it builds that momentum. So that long-term strategy has to be, what am I going to invest in myself? What am I going to put back into the business? Because your business isn't going to grow if you just think, hey, if I build it, they'll come. They're not going to come.
Right.
You're going to have to do things to
Hustle.
grow.
Yeah.
I've learned that in the podcasting thing. Like I started my podcast really back in earnest in November. And like the first couple months, I'm like, hey, I got a great content. People are going to flock to me. Well, guess what? They didn't. And I had to start paying for advertising. I had to pay for equipment. I had to pay to get myself out there and get involved in trade organizations and all that kind of stuff. That's all part of what you're talking about. It's that long-term investment in your future. And at some point, you would hope that would pay dividends. But Jeff, the big picture, don't spend every dollar you're making. Plan for the future.
That's so good, Ralph. You mentioned 401ks, and a lot of times creators, if you're doing it for yourself, you don't have that because and it amazes me, like when people work for companies, they don't use the 401ks because to me it's just free money. Like, what are you doing? Especially the matching programs, and I mean, just
Jeff, it's like this. Picture this. I'm gonna throw this at you because I used this in my show the other day. It's like you're walking down the sidewalk, right? And there's $100 bill on the sidewalk, and you just step over it.
Right.
And you're like, I'm not going to lean over and pick up the $100 bill, even though it's sitting there. No one's looking at me. Like, it's not candid camera. Take the 100 and run. But that's exactly what you're talking about, Jeff.
Yeah. So is there a way for people who have an LLC, or I know it's you can't for probably self-employed, but what are some options that could we start our own 401k in our business?
Absolutely.
Okay.
It's called a self-employed pension or a SEP plan. And you could basically, and you don't even have to be incorporated or have an LLC to do this. You could set it up with your broker and you can put up to 25% of your net income into that SEP plan. Now, it depends on certain circumstances. There's caps on that. But yeah, I mean, you can also do a solo 401k. You can do hey, at the very minimum, Jeff, you can put $7,000 right now into a simple IRA.
Right.
Hey,
Right.
$7,000 isn't chump change.
Right.
And if you put that here's a little thing I heard the other day. If you start at age 25 and you put $100 a month into retirement, by the time you reach 65, you'll have $150,000. Start small. Maybe it's 7,000. Maybe you can do a simple IRA. All these things people don't realize this. It's not that complicated. There are places online now that you can go and set up health savings accounts for yourself. Like I just set one up for myself. And it's not a big savings thing, but no, there's no obstacles to that, Jeff. There's really not. People get confused by that, but you can set those up no matter where you are. And it's so important to do it because two reasons: you're building retirement and you're cutting back on that tax burden in the current year. Like I tell people, we talked about at the beginning about tax burden, right? Well, for every dollar you put aside, let's say you're in that 30% tax bracket. to put aside $1, it's only costing you 70 cents. You got a 30% return on your investment at the start. I don't know of a single bank account in my town or yours that's
Right.
paying a 30% interest rate.
Right.
But that's the value of that retirement plan. And people just miss that because they're just chasing after the next dollar. They don't think about that long-term strategy.
So, so I love all this because I think it's stuff that I wish I would have heard when I first started. And you and I are actually the same age. I didn't know that, but that's really cool.
Very cool.
So how important is it? So we talked about, savings account for our retirement, but what about an emergency fund for creators? Because, a job is one thing, but like creator stuff, it can be a wild roller coaster, especially when you're first getting started, trying to get clients, trying to get content out there. So emergency fund, what guidelines do you suggest for building one and starting one and getting one kind of rolling?
So this will shock a lot of people, but my overall my overall plan is to have 3 to 6 months worth of income in an emergency fund. You might be going, Ralph, dude, you've lost your mind. 3 to 6 months of income, and I'm not expecting you to start that today, Jeff.
Mm-hmm.
But you can start it next week. Maybe you put $2 a day into it. Maybe you put $5 a day into it. Emergency fund is huge because we talked about this a little while ago. Stuff happens. You don't want to be tapping that credit card. You don't want to be taking money out of, maybe you had a former job and something happens. You got to take money out of your retirement. That emergency fund is there to help save you. And that's why I'm such a big, I stress that savings. As part of that savings, part of that's going to be that liquid emergency fund. Because here's a dirty little secret. 67% of the population right now has no retirement savings set aside.
Mm-hmm.
Zero. If you talk about the emergency funds, it's even scarier. People don't have $200 in their emergency fund. I remember when my kids were young, they're 23 and 27 now, but let's say they got sick and then you went to the pharmacy and they needed this antibiotic. It's $200,
Mm-hmm.
right? Most people don't have that in their pocket. So that's where that emergency comes in. And I think that triggers so much financial hardship, those people that don't have that emergency fund. Because then what do? You got to pay for it, right? It's a need.
Mm-hmm.
So you put it on the credit card or you borrow from this one, or you do this with that one. And so the emergency fund, I can't stress that enough. In fact, I'm going to tell you, if you're a new content creator, I think you should be building your emergency fund before you buy any once. Focus on your needs, buy the needs, but then build that emergency fund. If your side gig or your content creation is bringing you $2,000 a month, then save $12,000 that before you start spending it. And like I said, it doesn't have to happen overnight, but build that momentum. Because what'll happen, this is just the psychology of people.
Mm-hmm.
Once you start to build it, you'll be like, oh, wow, this account's growing. And then it'll build on itself. But so many people just miss that, Jeff. And trust me, I see this. I see people in their 70s living paycheck to paycheck.
Yeah.
They have no savings, and it's a sad thing. It just is.
And it's going to grow as the population ages.
Yeah, absolutely.
What would you suggest? This is the last question, Ralph. Is that what should they put that emergency fund in? Because I'm assuming it needs to be pretty liquid that they can get it out quickly if they need to. Would it be just a savings account, or do you put it in something that gives you a little more interest? What are your thoughts?
No, I think that a savings account is fine. Here's what I'm going to tell you to do: put it in a place that's not easy to get to.
Okay.
You don't want to have it in a shoebox in the top of your closet. Not a good plan.
Right.
And I wouldn't even put it in the same bank that you deal with. Make it painful to have to go get the money out, because you don't want that emergency fund to be like, you know what? I see Shure just released a new microphone. I could really use that microphone.
Right.
And I've got the money in my emergency account and I can just transfer it. No, that's not what the point of the emergency fund is. And I use that as a content creator inside one, right?
Mm-hmm.
But the truth of the matter is, make it complicated to go get it. I don't really care about the return on it, Jeff, because this is really liquid money. That's not what I'm telling you to put your retirement money. But that emergency fund, make it somewhat complicated to get. Like, I wouldn't have a debit card for it. Like, make it so that you've got to get in the car and go to the credit union. I'm a big credit union person. Or go to the bank, whatever that looks like. Make it complicated. Or here's another one you could do. Like, my youngest son, he's not good at saving money. I'm not telling stories out of school. He gives it to his mom.
Yeah.
Because he knows mom is going to say to him, what are you using this money for?
Mm-hmm.
Now, at times she's like, I'm not going to argue with him, but
Right.
create those obstacles for yourself, Jeff, because, and again, it doesn't have to be thousands of dollars overnight. Start small, but grow it,
Mm-hmm.
but make it complicated. So it's not that, yeah, I really do like that Shure mic. Or, oh, Rode just came out with the best headphones in the world. I could really use those. That's not what your emergency fund
Right.
is for.
And there's some cool new apps that like I've used before. Like Acorns is a great one, I think, because it'll round up your purchases and put it in a savings account. And for me, there's even a retirement account it goes into. So I like that because I don't think about it. It automatically deducts it. And then I'm surprised when I I have an Acorns account, and I go log in. I'm like, oh, wow, that's some good money for retirement. That's cool. So things like that I think are really, really cool.
I did that a few years ago, Jeff, even my own practice, because I wasn't a good saver. Like, I came from a place where my wife is the saver, I'm the spender, man. I'm an impulse buyer.
Right.
So when I first started my own practice, I said, what I'm going to do? I did direct deposit for myself, and I just took $50 per pay and I put it in an online bank.
Mm-hmm.
And it just goes there. I don't even think about it. The other day I went to a statement. I'm like, wow, I got vacation money.
That's right.
I was like, this is cool. But again, it's not easy to get to. Mm-hmm. It's a way, if I have a big problem that I need to get a quick cash to, then I can go use that, but I make it complicated.
Yeah.
Like they sent me a debit card, I put it in the shredder.
That's right. They did. Acorns did that too.
I have access to it.
Yeah, exactly. Well, Ralph, this has been amazing. Once again, folks, I hope you see and hear how much value Ralph brings to you. If you are a content creator, I would just go ahead and subscribe to his podcast and go to his YouTube channel. I mean, because there's topics that he says that just, oh yeah, I need to do that. I need to set up an emergency fund. Oh, he's talking about a tool that helps me with retirement. I need to do that. So he has a wealth of information that he puts out for free all the time. He's got books. So make sure you go to askralph.com to check out Ralph. Ralph, I'm going to let you have the final say, because this has been a fabulous conversation. Thank you for your transparency, your values from a Christian financial stewardship, I think is amazing, and it's very refreshing to see that. So the floor is yours, my friend.
Jeff, I'm going to leave with this. Now, if you're struggling with your finances, if you're trying to figure out, Ralph, I'm really good at content creation, but man, this financial stuff, it just sends me into a tizzy. Book a call with me. Just go to askralph.com. At the top of the screen, you'll see a button that says book a call with Ralph. Spend a little money. We'll do a consultation. We'll sit down. We'll assess where you are. I'm not a judgment guy. We're going to put it on paper. We're going to see where you are. We're going to put together a plan for your future. And just let me come walk alongside you in this journey, because this is what we're all on a journey. I'm no better than you. I'm just going to show you what the Lord has given me tools. The Lord has given me some things that I know how to work with. Let me be your partner in that. And it all starts by reaching out to me. We'll set up that initial call. And like I said, it doesn't matter where you are. It's like you're sitting right in front of me through Zoom. Just go to askralph.com and book that call. And again, subscribe to the show. I do daily content. I'm actually writing my third book right now. It's at the editor. The first book is called Mastering Your Finances. The second book is called The Gospel of Entrepreneurship, where I discuss how to bring Christ into your business and why that's so important. And the third book is all about the 7 biblical principles to stop and break that living paycheck to paycheck cycle. So again, just reach out to me. I'm one of these people that returns calls. I return emails, and I would absolutely love to hear you. And I'm going to throw one more thing out there, Jeff. Mm-hmm. I do a show every Tuesday. You go to askralphpodcast.com/live. Every Tuesday at 1 p.m. Eastern time, you can come and ask your questions for free. Just show up, go right into the chat window, and I will give you 30 years of experience absolutely free, because I want you to really be successful, and I would love to have you as a part of my community. So again, Jeff, thank you so much for giving me this opportunity.
It's great, and he does answer those questions, because I've gone to his live show before and asked him, and he does answer them. So once again, thank you guys so much for watching this episode, and go reach out to Ralph, because it really is very, very, very awesome, and it's opened my eyes. From a guy who hates financial stuff, Ralph has helped me become more confident and given me some answers to some of my burning financial questions. So highly recommend. Thank you, Ralph, so much. Thank you guys for watching. We appreciate you. We will see you guys next time. Bye, everybody.